What's going on, guys? So you're currently looking at the top year-to-date fund flow ETFs on the market. So these are the ones that most people are buying year-to-date. Of course, at the very top, we have the S&P 500. We have VTV, which is a broad market value ETF. But you're going to notice that not too far behind from the absolute top are dividend ETFs, SCHD, VYM, HDV, and even JEPI, which uses covered calls to generate very high levels of monthly income. So that's a clear indication that in this current market, income-producing value investments like dividend ETFs are some of the most popular. And that got me thinking, which high dividend yield ETF is the best value right now? And after much thought, I think BST has to be near the top of the list. Now, I know technically this is not an ETF, it's a closed-end fund, but it is perpetual and it's pretty similar to other covered call high-yield ETFs. The main distinction with BST is that it focuses on science and technology companies, which of course have been beaten down the most this year, potentially offering the best discount. And on top of that, because this is a closed-end fund, it can trade at both discounts and premiums to its NAV. So year-to-date, technology stocks in general are down about 30%, but BST is trading at an additional 1.5% discount. Now, taking a bit of a deeper look into BST, year to date, it's currently down 33%, which is a little bit more than the tech-heavy NASDAQ. And if we zoom out to the past 5 years, we can see a ton of volatility, and even now at potentially the bottom of the market before a strong rebound, which could happen, I don't know. The price return is 52%, which is pretty close to the S&P 500, but a major source of the return with this investment is the dividend, and it's currently 8.85%, paid out on a monthly basis, and because this is a closed-end fund, the distributions are managed, and we can see just how consistent they are. And if we come to the holdings page, of course, this is mostly made up of technology, and the top 10 holdings you're going to notice are large cap, relatively safe investments like Apple, Microsoft, Google, Tesla, Amazon, and so on. This is a very different composure than, say, the ARK Innovation ETF, which has a lot more speculative, smaller cap companies within it. It's just that currently in this market condition, everything that's involved in tech is taking a huge beating, potentially creating a good buying opportunity, especially because it's trading at a discount relative to the NAV. And here's a quick article taking a look at both BST and its sibling ETF, BSTZ, and I'll leave this link down below if you guys want to read the whole thing. So the basic investment objective is to provide income and total return through a combination of current income, current gains, and long-term capital appreciation. That's the main objective of BST and does this through technology stocks and a covered call writing process. And again, if you're familiar with anything like Divo, it's a pretty similar process. The biggest difference is that they focus on tech stocks in this case. Now, in terms of the performance, they give a nice graph right here showing how this investment operates. So we have the price and NAV of BST in these blue bars spanning a couple of years, and then the category average in yellow. And a hallmark of this investment is the high levels of volatility. So in good years like 2020, there's huge outperformance up nearly 70%. But there is a price you have to pay for this huge overperformance, and that's that when markets go down, you tend to go down more than the market. And Bitcoin is a great example of this. So year to date, it's down nearly 60%. But if you zoom out over the long term, there's a high level of volatility and great overall returns, up 602%, even during this downturn. For comparison, this is what the S&P 500 looks against that. Now, of course, BST isn't as extreme as Bitcoin, but it is more volatile than the market. And coming back to the article, that's kind of how they end this. They say that at some point, the tech sector will again be in the market's good graces, but nobody knows when that's going to happen. And if you want to invest in something like this, you're going to need a strong stomach. Okay, so long term, it seems like BST can be a good investment if you can handle all the volatility, and luckily along the way every single month you get a pretty high dividend because of the covered call strategy. Really the big question is, when is the market going to turn around? Because in that scenario, BST and really all tech companies are going to rebound faster than the value stocks. And this is the million-dollar question. Nobody really knows what's going to happen, and we are heading into the earnings season, which could add even more volatility to the market. But to end the video on some hard data and research, here's a forecast of the S&P 500 earnings that was released on July 11th, 2022. And there's a ton of different graphs here. We're going to run through it pretty quick, and I'll leave the whole thing linked down below if you guys want a more detailed view. So this first one is the S&P 500 revenues and the forecast into the next year. And in general, we can see the predictions right here. The next one is the S&P 500 operating earnings per share. Again, a pretty similar trend. The forecasted growth in EPS does seem to be slowing down relative to 2021, but we don't see a massive crash here. The next one is the operating profit margin, and here we see the biggest downtrend. And this does make sense because profit margins are heavily affected by things like supply chain, increases in their cost of goods sold, and general inflation. But moving on, the next one is the operating earnings per share. And again, a slight slowdown in growth, but nothing too grim. And this is pretty interesting. This is the S&P 500 forward PE ratio. And here we can see the massive contraction in stock price due to a lowering in the multiple applied, and we might be approaching a low point. And finally, this is the S&P 500 index forecast. And it kind of echoes the PE ratio prediction up here, pointing to the potential that right now or the next couple of months could be the best buying opportunity for the stock market. So with the intense popularity of income producing assets in this current market, I think BST might be positioned to be one of the best deals right now if the market does recover relatively shortly. It focuses on high quality, large cap tech names, it has a covered call writing process to generate consistent monthly income, and is trading at a discount currently. But let me know in the comments down below what you think. If you're still watching and enjoyed, I appreciate a like on the video. Go ahead and subscribe, and I'll see you guys in the next one.